Sup, freaks? It's your boy Marty here to introduce this rip of TFTC. Thank you for joining us. Give this video a like, subscribe to the channel. If you catch us on podcast apps, make sure you subscribe there. Give us a rating, a review. Go to tftc.io as well. Become a member of the site. Join the conversation. Truth for the commoner, trying to get you the high signal content in a world gone mad. This rip was brought to you by our good friends at River. River's here to make it as easy as possible for you to buy Bitcoin and then take it into self-custody. Go to river.com/TFTC, set up an account today, and you'll get $5 of Bitcoin after you buy $100 worth of Bitcoin on River. You can dollar cost average into Bitcoin with no fees. If you're just buying one off, River has the best fees in the industry. They back all their Bitcoin reserves 1-to-1 in multi-sig cold storage. They highly recommend that you take self-custody. They just introduced limits. So if you want to set a limit order below or above the current Bitcoin price, River makes that extremely easy as well. They also have real customer support. You can pick up the phone and call them if you have any questions about your experience on River. So go to river.com/TFTC, set up an account today. This rip is also brought to you by our good friends at CrowdHealth. CrowdHealth is here to provide you with a new way to pay for your healthcare. It's not health insurance. Health insurance is notoriously expensive, opaque, impersonal. CrowdHealth is really trying to change that model. You pay a monthly fee. It builds up in an account. If you ever have a health event, you let CrowdHealth know. They go to the doctor. They negotiate the price lower. You pay the first $500 and the rest gets crowdfunded by the CrowdHealth community. They have Bitcoin Lightning payments that they just enabled. So if you want to pay your monthly fee plus your doctor in Bitcoin over the Lightning Network, you can now do that. They've got a roster of doctors that you can access. They're approaching healthcare in the right way. It's a healthy community focused on preventative healthcare and avoiding the big pharma industry as much as possible. So if you're looking for a cheap healthcare solution, you're not happy with your health insurance, maybe it's a bit too expensive, try out CrowdHealth. Me and my family use it. Go to joincrowdhealth.com/TFTC. Sign up today using that, and you'll get $50 off your first month. Joincrowdhealth.com/TFTC. Enjoy this rip. We are recording. We're not live.
Not live streaming.
We will drop this tomorrow morning.
Cool.
Senator Warren. I mean, it's actually a good jumping off topic for this discussion. Historically, famously against the big banks, but for some reason or another, she seems to be their best friends. Their best friend these days. They're teaming up to attack Bitcoin.
Yeah, I don't...
Pull that closer to
you. I always wonder where these things come from. I think, like, if you just step all the way back, somebody who is as... for lack of a better term, like anti-American, just in terms of, kind of what her policy agenda generally is relative to the founding principles of the country, that you can kind of explain at the, 30,000 foot view why she wouldn't like something like Bitcoin, but it's also, there's always special interests involved, right? And there's always something that somebody wants in the political sphere that they're getting in return, right? I don't think that, it's all about money. So I don't think that despite, someone like Elizabeth Warren's socialist, communist leanings, that it's just that there's got to be some special interest that, is trading some horse to have her be out in front of this. But this also isn't new what's happening right now. It also, I feel like, she's been leading this charge for at least the last, year and a half, kind of like what happened, the policy that they were working through summer of last year, similarly she was a champion of. So, it's not a surprise, but I do think it puts, Bitcoin on display, kind of light versus dark, good versus evil.
Yeah, light versus dark, particularly like juxtaposing Bitcoin with the CBDC, which is what Elizabeth Warren would like to thrust on the American populace.
Yeah, and then, it's like, again, what is the special interest that, she's pushing?
Did you see the video that came out today?
No.
one of her co-sponsors on the bill came out and explicitly said that the American Bankers Association helped them draft the bill.
Yeah, I mean, if you go back to the formation of that, it's the guy who wrote the book Creature of Jekyll Island. But when you realize that the people who wrote the Federal Reserve Act, were secretly the people who controlled the existing banking system, I guess that's no surprise. But it is also, do you remember when Neil Kashkari, basically, who's in terms of his like what he advocates for in terms of monetary policy, like disaster, in terms of, had the famous, line on 60 Minutes where he says, we have an endless amount of cash at the Federal Reserve.
An unlimited amount of cash.
Unlimited amount of cash. But, there's that, in I guess our circles, that famous video of him saying, like, I know why an authoritarian or a communist would want a CBDC, but why would the American people? Like, basically saying, I think, and he actually articulates, like, if you want a mass surveillance state, like, I can understand why you'd want a CBDC. I do not understand why the American people would ever want that or agree to that. So to have somebody like Neil Kashkari, who's otherwise, fairly like head in the sand when it comes to, understanding the ramifications of printing massive amounts of money, on this one, he happens to be, a very clear signal, which is just interesting, having like someone like Kashkari juxtaposed against someone like Elizabeth Warren.
Yeah, CBDC is a step too far for these people who have created this insane monetary policy.
Yeah, it's like,
which I guess,
and I think
glimmer of hope, maybe.
One, I think in the broader context, we already have a digital currency. It is the dollar. This is just a different technology rail, upon which to deploy it or through which to deploy it. And that current system is centralized enough that Fed or Treasury can functionally, not literally, but functionally exert whatever pressure they want on whatever, large interest to get to the same means as what a quote pure digital, central bank digital currency would do. And if you did that, it would be like hitting people over the head, and be more obvious in terms of exactly what your intentions are. And, typically, it would be more common for them to be underhanded, to be, to want to achieve the end through a less obvious means. So, I think that's kind of the strange thing about like Elizabeth Warren's like kind of, over the top support for CBDC and her, antagonistic nature toward Bitcoin. But I do think that, it all anchors back to there's a special interest pulling the plug, or not pulling the plug, but pulling the strings and funding her campaign or giving her some other policy, kind of promise or something else. Who knows? It doesn't really matter what, but it's there.
Yeah, I wonder what she's aiming for, because we've heard the rumors that she and others may have told Gensler that he'll be the Treasury Secretary if he plays ball with their attempts to thwart the industry here in the United States. I don't think.
Yeah, but what
Elizabeth Warren, didn't she run for president last election? Like, does she want to?
I think she got like 0.1%. Like if I remember correctly, and it's a long time ago now, but I feel like she never got more than like 1 or 2%, and then she dropped out of the race. So I don't think she's a serious, contender in any future election.
No.
And also, like, if there were promises being made to quote Gensler about, a future position, a future administration, it's like, I could understand, similarly, someone like Janet Yellen at the Treasury Department, her antagonistic nature toward Bitcoin, but, that would make more sense of like, I don't know. It's like their whole circus is, actively unraveling, and, with each next thing that somebody, who is functionally socialist or communist, kind of the further and further out on the ledge, the more obvious it becomes, not to necessarily even the majority, but for the people that are paying attention.
Yeah. Yeah, that's
been my inclination recently is this push for the CBDC, particularly Warren posturing that way and others being somewhat open to it, is that they understand that something's broken on the back end and they need this thing to sort of reset the system.
Or they're told that that will be the, like, there's something broken and this is how we fix it.
Yeah.
But I think, the motivation is first and foremost some special interest. Second, like more surveillance, more control, more, shifting away from the Constitution, in terms of like what the underlying principles are and what the underlying protections are, and it being rooted in, protecting the rights of the individual. So, at the end of the day, I do think that in certain ways, like the central bank digital currency is a distraction because, to me, it's irrelevant. It's like the current system's broken. This just makes it marginally more broken. Like if it's broken, it's broken. And that it's not to say I don't ever see them, quote, changing like the back end, of how their system runs, but the way it functions, it is already a not just trusted system, it's a hyper centralized system. And in that world, the difference between that and things that people are talking about are marginal. And then the consequences, rather than forcing people to be more forward in the support of Bitcoin, is very it requires very little political capital to say I'm against CBDCs. It's like it almost feels like this like psyop to like have these two people fight on this false front, of CBDC. Oh, I'm for or against. Where it's like, okay, you guys fight over there while a bunch of individuals that produce things in the real economy go figure out a real solution.
I hope that's the case. And this is a good backdrop for the conversation we want to have. I mean, this is where the state of the discourse is today, is this framing that you just described with the backdrop of a systemically weaker financial system compared to what we talked about in the foreword that I wrote in the introduction to Gradually Then Suddenly. And like to set the case for this, I think what we're trying to get out of this conversation today is to really drive home the people that Bitcoin is a child of the great financial crisis of 2008, 2009, and everything we just discussed. The first 5-10 minutes of this episode really is just a knock-on ripple effect from the consequences of the reaction to that great financial crisis. And you can argue even further back in 1971 all the way back to 1913, if you will. But I think for us, for the context of the book, which you can now go buy at thesafehouse.com.
Good plug.
Is the great financial crisis is really the nexus of Satoshi launching Bitcoin into the world.
Yeah, I think that, I think everything, with each passing day, kind of every evolution of what the Fed is doing today, Fed or Treasury or our, central government, realistically, because while there's that, supposed to be that kind of formal separation, functionally it doesn't exist. And that, the way I like to think about it is, for many decades, it was decades of imbalances that built up in the financial crisis of, similarly a function of money printing, just in smaller, more regular doses. And that then, the imbalances that have grown over 3 or 4 decades broke fantastically. And ever since then, it's been, trying to get out of a straitjacket of, being, at the, late stages of that system collapsing entirely. And the thing that, about your forward that was great, to me was, kind of you relating kind of your formative years, junior in high school, senior in high school when the financial crisis happened. I was a few years out of college, at Deutsche Bank, And a lot of the, kind of principal way that I got to understanding Bitcoin was because of the financial crisis. And I do think that there's a whole generation of us that were coming of age at that point. It's not to say that people that are older or younger can't similarly grok Bitcoin for, similar underlying reasons of the financial system being broken. But, for me, I kind of looked at the world and said, okay, something was clearly broken. Unclear what at the time when I was, 2008 working at Deutsche Bank. But I never got past that. It was always like something was broke and we didn't just go back to normal. I think a lot of the world was like, oh, that was scary, but that's gone now. And that, for me, I didn't, Bitcoin didn't immediately click, but then, for separate reasons, when I was going back through the history of the financial crisis, as part of my role working for a hedge fund, trying to understand what would happen when the Fed unwound its post-financial crisis QE, as that started to make sense of why they had to print all the money, that's what then made Bitcoin make sense to me. And that it's not just like a, quick, easy, like, oh, tell me that and then that and it all makes sense. But that period of my life was formative. And if I was looking at Bitcoin in a vacuum and just trying to, analyze it on its own, not in relation to the solution or the problem that it's intending to solve, I could never have arrived at Bitcoin as money. It was kind of that anchor point of seeing like, okay, this system is broken. It was never fixed, can kick down road. And now it's becoming very clear to more people that what was off then is still off now. And the, kind of panopticon is flailing and trying to figure out like, how do we quote fix this? Can we fix it? Or what do we do next? So, me and, being right out of college during that financial crisis was critical to my ability to relate to Bitcoin and to see it as a solution. And I think that, for different reasons, after reading your forward, different era of your life, we were in different places, but, kind of questioning the world in similar ways because of that, cataclysmic shock that happened.
Yeah. And I didn't get to expand upon it or expand on it too much in the forward, but I mentioned that during that time, my dad was going through a lot of stress. So my dad, for most of his career, worked as a marketer for funds, typically like small cap and mid-sized funds. He would essentially help go raise money for these funds that RIAs would be able to allocate to. And so I think seeing him go through that stress really multiple times throughout our life. So I think my story even begins before 2008, go back to 2001, after 9/11. Like, we had just moved from Philadelphia to South Carolina. My dad was working for an asset manager, and he took over the Southeast territory of the United States, and we literally moved from Philly to South Carolina, I think mid-2000. We weren't even there for a year when 9/11 happened. It's like late 2000. Then 9/11 happened, and he immediately got laid off after that event. And you had financial turmoil and a crash in the markets then. Obviously, the dot-com bubble was blowing up. It was off the heels of the dot-com bubble. And so he wound up getting laid off, and we lived in South Carolina, and he took a job as a bellhop and took side jobs while he was trying to rebuild his own business on the side. And he built that up over the course of the next 6-7 years and got it to a place of great success. And then 2008 happened, and the same thing that happened in 2001. So I had these two very close to home events happen to my family centered around this financial crisis. And then going to 2008, when I was a senior in high school, I just so happened to be taking this elective economics class. Went to an all guys prep school, so we had really good teachers, and my teacher, Mr. Robson, who I mentioned.
Do you think Mr. Robson's a freak?
I don't know. I went to the directory. My mom obviously read the forward and said you should reach out to Mr. Robson. I couldn't find his information. He's not teaching at the school anymore, at my high school. So Mr. Robson, if you are a freak and you're listening, reach out to me.
But yeah, explain kind of like what he had you guys doing as a
so it was funny.
high school senior.
So it was, from what I remember, obviously it was, gosh, how many years ago now at this point? 15 years ago
Yeah.
at this point. So I don't remember the exact curriculum, but I do remember him, like, we started that fall semester right after Labor Day. Markets go into turmoil like a week into the class. And like the week before markets blew up, we started, like, one of the things we did in the class was like a stock picking thing. Like, you get an allocation of 10 grand and we had the software where you could pick stocks and create a portfolio. Everybody's portfolio immediately went to shit. But as the crisis was going on throughout the 3 months of that semester, obviously you had TARP and the bailouts and Hank Paulson and Tim Geithner going to Capitol Hill, getting on their knees and begging. And he was really on top of that. Like, gentlemen, look at what they're doing. And then TARP, I think, was, and I mentioned it, and I mischaracterized it as the toxic asset.
I said
relief.
it was an intentional Freudian slip that will forever be, we'll never correct it in the future. They were toxic assets.
Yes, they were. I mean, literally, if you look at it's the troubled asset relief program, but if you look at the definition of what that is, they're buying toxic assets from the banks. And we dug into the TARP bill, like, granularly, like it was an 800-page bill, and he had us, like, read all the different stipulations that different congressmen and senators snuck in the bill. It was a spending bill, essentially, and they were just putting in a bunch of, at the time they were calling it pork. It was filled with pork. That was, like, one of the lines that the media was running with. And so he had us identifying all the pork, and it became glaringly obvious to me in 17, again, a very traumatic financial event is happening, and something that I'm aware of for the second point in my life. Yes, I was 10 when the first one happened, but I don't remember the financial ramifications of the markets, but I do remember what happened to our family, and I immediately began to connect those two when I was 17 in this class. And the TARP bill really highlighted to me that things were terribly wrong. Like, how, if the financial system, the economy, the global economy, was on such fragile footing and was in such dire straits, could any of the politicians focus on anything but, like, the financial aspect of everything? And they just threw all this pork in the bill that really highlighted, like, moral hazard and just, like, the corruption that exists in our system. And then Mr. Robson just made it clear to us as all this was unfolding, like, this is not right. This is not how things are supposed to play out. I'm pretty sure he was of the Austrian persuasion and a sound money guy. And he really instilled, when the semester ended, I had a whole another semester of senior year before I went on to college, but I'll never forget, like, him basically telling us, like, this is really messed up. Like, you gentlemen should try to understand what's going on here. And so, as I mentioned in the forward, I went to college with a know your enemy mentality, studied economics to really try to figure out what was going on in the system and to learn about it so that I could answer the questions I had as a 17-year-old. And of course, studying economics in college started in 2009. I think it was around 2012 when articles about the Silk Road started popping up. And I found Bitcoin. I don't remember exactly what it was that had me identify Bitcoin. It was like 2012, 2013. Once I found it and then actually, like, read the white paper and understood that it was a monetary system with no central authority. It was a distributed system. It clicked with me almost immediately. And I became infinitely obsessed and knew immediately that it was the answer to the problem I went to college trying to solve.
Yeah, and I think that, I mean, the thing that I loved about your forward was, one, it just fit so well with the introduction that I had written of, you know, kind of really jumping in to tell my story about how I came to Bitcoin and linking it to the financial crisis. Because I think that, you know, when it's on the TV screen on CNBC and they're talking about it like a stock, and, the snake oil that is crypto and that all that nonsense, or that it's like a technology, like, it creates this amount of noise that allows people to, when they hear the word Bitcoin, not just associate with it, but rationally turn it off because they associate it with snake oil, and so it's a very hard challenge for us that are trying to be out there educating and communicating, because very reasonably, if you're sitting on the outside looking in, you're like, okay, no, that thing Bitcoin, you're telling me it's not snake oil, but it looks the same to me. And that starting at the financial crisis and kind of very intentionally with the book to try to get people's attention, but also relate to them in a way, and relate to them specifically connecting Bitcoin to the financial crisis, to say this is something serious, and this thing Bitcoin is related to that thing, the financial crisis, and that the problems that existed then exist today in a worse way, and this is the only thing that can viably fix it. And I remember myself, like, didn't have that similar experience in 2001, because I was in high school then, but my dad was in real estate and kind of living in Austin, Texas, not super exposed to the stock market, but then at the financial crisis, I was working at 60 Wall Street. I would have been a second year analyst in the M&A group, and I remember something critically happening in the fall of 2007, but not remembering exactly what that was. And then obviously Bear Stearns failed, and ultimately was bailed out through an acquisition for equivalent of pennies on the dollar, but that was engineered by the Fed and the Treasury. And then what I really remember is, like, over the summer, basically every whether it was summer or right around the time of Lehman Brothers, people just being tapped left and right and being laid off. I remember having like the recollection to be like, okay, I can't imagine being in that guy's shoes at that person's age, and I never want to put myself in that position.
Were they older?
Yeah.
Yeah.
And then I remember one night, and this was around when Lehman Brothers was rumored to be failing, working on the 45th floor, leaving the office at like 9 p.m. on a Friday. And like, there must have been 10 senior bankers sitting in the group head's office at 9 p.m. And you're like, okay,
margin call like situation.
That is not a normal thing to be happening, and then, kind of, because there were a lot of rumors about Lehman Brothers. And remember that weekend, being in New York and some, social event, talking to friends about it on a, kind of rooftop porch. And then Monday morning, Lehman Brothers gone, and I really think that there's two I don't know what, not maybe archetypes or personalities, but there's people who look at what happened in 2008 and they say, it was crazy, it's not going to end well, but they had to do it. And then there's another group of people that have common sense that look at it and they're like, that was crazy and it's not going to end well. And that recognize that there's no logic applied between it's crazy, it's not going to end well, and the part where they say, but they had to do it. And so, my broadest hope with the book is that people, more people are able to come to understand Bitcoin in a way that's accelerated. Kind of myself, I read the Bitcoin Standard, it was formative to me, but then relating it specifically to all the research I was doing at the time related to the financial crisis and the dollar and its brokenness and why they were always going to have to print money allowed me to pair that knowledge with the Bitcoin Standard, and then, be able to apply, the things that I had to work through in a very logical, reasoned way to not only recognizing that something was broken, but why Bitcoin was the solution. And that kind of tying those things to the financial crisis for a lot of people who are, of their working age now in the primes of their career, being able to, like, they know because they lived it, to then, understand right at the front of graduate suddenly that, in my view, and I think what will prove to be true, as a testament of time, that this thing Bitcoin, not just, the I don't want to say coincidence of its release, because I have to, believe that, when Satoshi Nakamoto wrote the white paper, worked on the code, released the code, that those problems that all of us came to see in a brighter way, at times of financial crisis, maybe he learned, in the 2001 crisis, or was paying attention to the manipulation of interest rates by printing of money that had pre-existed. But, that sudden shock that was the crisis is a period where people don't forget if they were, alive and conscious. And even at the time, if they, might be one of those people that looked at it and said, but they had to do it, if they start to relate it to Bitcoin, they can start to see that maybe there is another path. And if I start to, read and learn about and understand Bitcoin through that light, maybe I can see something that I couldn't see previously. So that's my broadest goal.
Yeah. And as it pertains to Satoshi, I think it's pretty clear he overtly referenced the inability of the central governments and the central banks to not debase the currency due to the levers of control that they had access to. So I do think it's...
Oh, no, 100%. I'm just saying that, the fact that he had, written all the code before the 2008 financial crisis says that he was keying in on this being an issue before it was obvious to a lot of other people.
Because we do have
It wasn't like the financial crisis happened in terms of the height of it, which was that September of 2008, and then Satoshi sits down and starts thinking about this as an idea and writes some code in 45 days and releases.
No, because I'm pretty sure we have historical evidence. I think Adam Back audited the code in July of 2008 or something like that, and a couple others on the cypherpunk mailing list. So he'd definitely written a lot of the code before.
Yeah, and this would have to be something that you were thinking about for a long time.
Yeah.
Right? But, basically being that much more prescient, that to be working on it, for however long leading up to then have it ready to put out to the world in literally the height of the financial crisis. And that is also what, makes it so, just the timely of the period of time that we're living in is someone like Elizabeth Warren can be so, not just tone deaf, but backwards, kind of antithetical to, American spirit, American culture, whatever, the Constitution. But that, the kind of the way that I started the, introduction is kind of basically going back through that timeline of March 12th, 2008, basically David Faber asked the CEO of Bear Stearns why or whether Goldman Sachs would not accept the counterparty risk of Bear Stearns. Bear Stearns fails. 6 months later, Lehman Brothers bankruptcy, September 15th, 2008. Within a few weeks, the 2008 Emergency Stabilization Act. And then, 30 days later, shadowy supercoder steps out from the middle of nowhere and puts forward the solution. That it wasn't just the timing of its release that is relevant to me. It's that, it was the solution to the root cause of what was broken, and that really is the most relevant of all of it. That it wasn't just that it happened to be put out at the same time as that person had identified a problem, long before, and then put out the thing that actually worked
at the perfect time. Yeah. And going back to Elizabeth Warren, for me personally, thank you, number one, for letting me write the forward.
Thank you for writing. It was the perfect forward.
And because it was a bit cathartic for me, because I don't know, it's personal to me. When you see Elizabeth Warren out there basically being a spokesperson for the banks now after years of being the bank hawk on the Hill, particularly after the financial crisis, it is disgusting to me, because I do have a deep-seated, hardcore belief that this is the root cause of the systemic issues that exist in our society, not only financially but socially. Going back to my dad's story, he died earlier this year. He was 54, and I would not I would go as far as to say that like the economic stress that he felt throughout his life, like contributed to his early death. And that's, my dad's just one example of many that are out there that particularly grew up in this hyper financialized industry. He graduated college in 1990 or 1991, the year I was born. And then that was the industry that he saw the most opportunity in, and it was just built on this house of cards. And I watched him throughout my life just get beat up, and he was a great man, great father, great friend, uncle, brother, son, and he shouldn't have had to go through all that. And I don't think he did actually wind up connecting it. Like as soon as I got into Bitcoin, began explaining it to him, like he grokked it and understood. He was like, yeah. And he walked away from the finance industry later on in his life to start a coffee shop because he didn't want to deal with the stress anymore. But it's one thing I tried to lightly get across in the forward, is that like, for me, this is actually personal because it affected my life, my family's life pretty directly, the insanity of the financial system. And we're just one family of millions of families that are out there. You don't even have to be directly associated or working in the financial industry to be affected by this. Anybody who saves or tries to save dollars is. And it's a very, very big problem.
I think it's personal for everybody. Like when you think about like what you have to put in to produce actual value to then only be rug pulled, and that when a country's currency hyperinflates is the ultimate rug pull, but like, literally like crisis after crisis. I remember like right after Bitcoin started to click for me, I stepped back from working at the fund that I was at because I wanted to work on Bitcoin, and went out to Santa Fe, New Mexico, got a guide and went fly fishing, and this older gentleman was our guide. And I don't even know how it came up because I certainly wouldn't have been talking about Bitcoin by that time. I was still like, trying to find my own way in it, of like really deepening my knowledge. But like somehow it came up that this would have been 2017, that he had just gotten back to even from the financial crisis, and this was probably a 60-year-old, fly fishing guide on the side. And when you think about that, it's like in my mind, that signaled like lost decade, and that, when I was sitting there in a bullpen, at Deutsche Bank, seeing guys who had families 45, 50 years old, just like, you're out, and that like it's personal to, people who are most acutely kind of impacted, on the front end of those crises. But then it's like when you just think about down to the last individual of like what is actually happening and the consequences of the instability created, not just what we've seen to this point in our country, but what we all kind of sense is out there. It's like people feeling like, the impact of inflation, going to the grocery store, figuring out how they're going to feed their family, like the cost of travel, things like that. That's very personal, I refer to it as formative because, being in that chaos zone, in and around the financial crisis, it was just like, that feeling of something being broken, but not knowing what it was. Now it's like that you see Bitcoin, it's like, it gives you a reason to be optimistic, mm-hmm. right? Because, the thing that I, still think is so personal about is imagine like the majority of the world out there that is feeling and suffering from the same underlying economic struggles, but can't identify what exactly. Searching for like things to blame or, just dealing with the stress of it, but not connecting it with a solution. Because, kind of at the same time that I figured out, this was 2016, into 2017, just how broken things had become. If I hadn't quickly figured out Bitcoin, it would have been very easy to be very negative and pessimistic about the world. If you not only, like, it's one thing if you're just feeling the symptoms of a problem but not identifying the root cause of the problem. But even if you can identify the root cause of the problem, if you can't identify a solution, it's incredibly difficult to not be stressed out constantly, or to be optimistic or to be hopeful. And so, when I think about where it's like I go out and, try to explain Bitcoin to people and help them understand. And one of the things I mentioned in one of the chapters, Bitcoin is the great definancialization, of like that there's something cathartic when you're finally saving in a form of money that works in your favor rather than against it. And like what that ultimately translates to is like getting off the hamster wheel, and what you can do when the value that you produce in the world retains its value in the future. You're finally able to just, one, have some stability, and two, work on the things that you actually want to do and actually value, rather than just working to pay bills. And like, you see the statistics about how half of Americans, don't have like $500 of emergency funds or live paycheck to paycheck, whatever that is. Whatever the statistic is, it's in and around that order of magnitude. The dollar being printed and causing everything that someone's produced in the past to lose its value is very personal. And the times of financial crisis are when the, kind of supercharge of the event of money printing happens, that, then trickles through to just destroy people's, kind of essentially past decades. And, I think that for a lot of people who are either working on Bitcoin infrastructure, building Bitcoin companies to be able to make Bitcoin work better, podcasts, 1031, the book, kind of past work at Unchained, now working on Zapright. It's like, it's a very kind of purpose filled, kind of, we're moving forward and driven, but, it does seem consistent to me that, a lot of people that work on it, do it for, not just personal reasons, but because kind of the consequences of the broken system are very personal. And that there's a wrong to be righted, and that is Bitcoin.
Yeah. Why do you think it's so hard to get this through to people? I mean, obviously that's the intent of the book, is to get this through to people. Why, up to this point, do you think? When I try to rationalize it, I think that there's a lot of noise. So if I try to go back to myself before having Bitcoin clicked for me, it's very difficult to put yourself back in that state, because Bitcoin is incredibly unintuitive. So it's like giving those people a break, on the front end. It's like, it's not intuitive. Nobody has asked the question, what is money, in their life. They've, a lot of people have evaluated buying a stock or buying a piece of real estate or buying a bond, making financial investments, making consumer decisions. They've never consciously thought about the what is money question, because they, people in a developed world at least have never really had to. Money's been there, and even if it's, quote, broken and degrading over time, it's getting them food at the grocery store. So it's like, that's the inception of it. Second thing is, there's a lot of noise. So when you're trying to decipher, hey, this thing's Bitcoin different from all those things, if you start from that point of this thing is incredibly unintuitive and it's difficult to see, layer it on with all these things put together look the same. How am I supposed to decipher? And then the third thing, which is kind of what I mentioned in the introduction, and hope people read the introduction online or share it, and then get their friends and family to read it, that I think a lot of people become intimidated, or maybe said another way, are fearful that if they consciously endeavor to try to understand it, that they won't be able to, because they assume that it requires a lot of like technical understanding. And, it's one of the reasons why I like to describe it's like not an IQ test, it's a common sense test. And, some billionaire can get it, some other billionaire can't. Some, yoga teacher can get it and some billionaire can't, but that when you add those three things up of like incredibly unintuitive, people haven't had to ask that question before, to a lot of noise and distortion,
It's why, everything that is blockchain, digital asset chamber or blockchain council, like I view as like, in some cases maybe unintentionally, but moving the ball backwards, because it distorts and conflates and creates this cloud. But then, if you were to think about human psychology of someone saying like, okay, I want to understand this, but if I try and fail, maybe it's better to not try, because I don't want to be reinforced that if I tried, I can't actually see it, And so, I think that, it is the cumulative effect of those three things, but that's also why kind of, one of the ways I describe my writing is that, like, I don't know if this is actually true, but I've always associated myself with like a very right side of the brain. Like, I have to have things logically ordered. Like, I was not a tech bro. I was not a, dive headfirst in, like, YOLO, let's buy Bitcoin. If it works, great. Super conservative when it came to, saving and investing my money, and that in order to, I like to think that, like, having met Safe before he wrote the book, The Bitcoin Standard, and having him, kind of share a lot of his knowledge on money and monetary economics, but then the Bitcoin Standard kind of like helped things fit into place for me. But even then, I still needed to like logically order all the but what about X, Y, or Z. And so my hope is that kind of couple things about my book that I hope will help reach another, layer of people is, kind of connecting it to the problem, because I think that if people look at Bitcoin as a solution in search of a problem, that is also part and parcel to why they may not endeavor to try to understand. But if they connect that this thing Bitcoin is about, that thing the crisis, and that thing the crisis is about, they're always going to have to print money, with a approach that's like, I'm building a very logical case, because these are literally the things that I had to go through myself, even after it started to click for me, to come back to the same conclusion consistently, time after time. Bitcoin does work. It does work because of its fixed supply. Because its fixed supply is credible, it's the solution to this problem. And so, but also just a bunch of people's brains work differently. So, being able to communicate my thought processes will inevitably reach people that have similar thought processes to myself, just as like, somebody else might write with a different style and, kind of attack it from a different angle and be able to reach people that I couldn't. So being able to have, and obviously, not obviously, but, the series that I wrote that this is kind of built off of, that I published from 2019 to 2020, it's already, kind of impacted a lot of people. So, but my hope is now that it's in a book form, that, that combination of attaching it to the problem and logically ordered, will allow more of those people that struggle with that combination of it not being intuitive, there being a lot of noise, and they're being fearful that if they try, they'll fail to understand it, that if they give this a shot, that, this is hopefully meant for those type of people.
Out of all the chapters in the book, based off the essays that you wrote previously, what was the hardest question for you to answer that you were proudest of putting into clear logic?
The one, probably Bitcoin, not blockchain. Really? Yeah. And I think it's also probably the one of the densest, and I have it as the second in there, and I've kind of like in the introduction I explained to people like understanding Bitcoin is not a linear thing. You have to juggle a lot of different concepts at the same time. I've written each of the chapters or essays in a way that they can be read as standalones. They're packaged together to be a comprehensive framework, and they're ordered in a way that say like, if I was to go through this is how I would order them in an outline. But if you're kind of struggling with a fundamental, because the first two are probably the deepest in terms of the fundamentals, and Bitcoin, not blockchain, is the second one, but you have a question about, something like, well, you're saying Bitcoin, not blockchain, but, you're talking about how it uses all this energy, and that doesn't seem sustainable to me. And then, but if you're hung up on that question of energy and sustainability, and I have an essay that's Bitcoin does not waste energy, it's actually easier to digest why that's the case. Just go read that one to jump around. But so I was a little bit, questioning myself for putting it second, but it is, in my opinion, kind of like the hardest question for those people. And I think the people that I connect with, it's like, you have to have thought about Bitcoin some, and you probably had to be confused about why Bitcoin is different for that one to really land. But I think it's probably one of the hardest questions, and to be able to approach it from a very logical way, because the way I think about it is like, if there's 1,000 cryptocurrencies and only one of them is signal, but 999 of them are snake oil, which is the truth. But
now it's probably like 9,999.
Yeah, whatever it is. If I was to tell someone that, their immediate and very rational question would be like, okay, I know you're saying that, but like, how can you make that statement? And that if you approach that problem from, I've got to go evaluate number 1, number 2, number 3, number 4, number 5, number 6, number 7, all the way to 1,000. There's far too much information for you to possibly arrive at a coherent or any answer at all. But that if you start to build up on a few, bottom-up building blocks, and the ones that I articulate in that piece are, I basically explain fundamentally, basically what a blockchain is, demystifying that, articulating why it only works in the application of money, and then articulating why money converges to one, or why economic systems converge to a single medium. And that if the reader comes away and says, okay, I can get why economic systems converge on a single form of money, but assume that is true. If it is, then does this thing blockchain only work in the context of money? Because if it does, then you put those two things together, and someone could rationally say, well, now I know that there's only going to be one, and I need to just be identifying one versus the next, not 1, 2, all the way to 99. So that one, I think, is the hardest thing for people to, like, once Bitcoin starts to become a possibility, where like they've gotten to the point of like, not just being open to I want to learn, but start to be able to say, okay, I know that there's some signal here, but I still don't know if it's real or not. That the thing that often trips them up is being able to distinguish Bitcoin from everything else. And the reality is, if economic systems converge on a single form of money, and a blockchain is only good for one thing, and it's the application of money, and Bitcoin has a fixed supply, then it obsoleted everything else already. So, and I go through kind of like the technical parts, but in a way that's meant to be accessible. So that was one. The other one was probably Bitcoin is not for criminals, because I talk about censorship resistance in that one, and I kind of use it to explain on a fundamental level, kind of what censorship resistance means, why it's relevant to Bitcoin, why it's related to Bitcoin's fixed supply, and why basically Bitcoin has to work for everybody in order to work for anybody. So that one was probably one of the best and easiest that I did, but also, helpful. Maybe, Elizabeth Warren will pick it up.
Matthew Stoller should read that essay.
Read it sometime.
Did you see that today?
No.
Bitcoiners are treasonous.
Bitcoiners are treasonous.
For enabling criminals to use Bitcoin.
I feel like, there's nothing more American than Bitcoin.
Agreed.
Like when you think about just like this quote, like the structure of governance, like kind of on a couple of levels, but like when you think about the checks and balances in Bitcoin, and nobody, like the mechanisms that ensure why no one is really in control, why it's incredibly hard to change, like similar to the structure of the checks and balances. And, kind of one of the great things about the structure of government in the United States was that it was very difficult to change. And then that it puts the individual and enshrines the rights of the individual over everybody else. You own a Bitcoin, nobody can, equal rights. No one can debase that. It doesn't matter if you're in one of the poorest countries in the world, or you're Paul Tudor Jones. You have the same assurance, and so whenever I hear people saying that either the dollar's patriotic, like that is one of the most comical statements.
Expand on that.
Like one of the statements that like lacks supreme self-awareness to claim that the dollar is patriotic. It's like one, like, there were like, you could go back to the 1700s, go back to like when they were trying to, do one of the quotes that I have is from Alexander Hamilton, who's a lot of people, give credit to or deride because of, the first Bank of the United States, but he was vehemently against unbacked money, or paper money, so just like thinking about the, like read the Constitution and, show me where, the Fed's ability to print money is somehow patriotic. But then when you think about it at its broadest level of like basically putting this collective, which is the entity of the United States, the mechanism by which the central government puts itself into debt and then finances it, the Fed, is inherently a collectivist governance structure, and the United States Constitution enshrines the rights of individuals.
Yeah.
So people and yeah, like that dollar being patriotic is like, go read some history.
No, I think it's par for the course in the era of the manipulation of the definition of words. Like in their minds, the dollar is patriotic in the sense that you need to be pushing forth the efforts and the goals of the U.S. federal government. Like that is the sense in which it's patriotic to these people.
I think like the era and I see a lot of even people that I will agree with on most things. They will say things like, the dollar is important for our national security, and clearly that is I'd say whenever they express those views, they're talking about it maybe in relation to how our military is funded and associating, we need to be able to fund our military in order to have a, viable defense infrastructure. Or they're talking about the U.S. financial system itself and the rails and, doing our best to keep out all the drug lords that still seem to use our financial system and the banks just pay fines for after the fact, but that what I think, particularly on like the front end of it, which is like, well, the dollar's important because it's how we can ensure that, we have the best military and that translates to the greatest defense. I think it ignores the thing that actually creates security for America, the American people, which is enshrining the rights of individuals. And I think that that's what, if I'm reading history of the founding fathers of the United States, it was knowing that the collective would be most secure if the rights of the individual were secure, and that the rights of the individual do not come from a government, that the government is there to serve a purpose, which is to protect and ensure the rights of the individual, not that they come from the government. And so that if people got back to that foundation, they would see that the current centralized ability to print money undermines the rights of the individual. And if they figure that out, then they'll understand why if you're only looking at the first derivative of I print money and it goes to military defense good, that you're compromising everything and undermining everything. And so dollar's actually bad for national security because it undermines individual. I'm
laughing because this is playing out in real time too. I was going to say, are you aware of this? Ask you, but I'm pretty positive you're not aware of it. But there's a big trend that's been growing on TikTok over the last couple weeks, which is enlisted servicemen, typically millennials or Gen Zs, like openly going and taking selfie videos, telling people not to join the military because they don't make enough money. They can't afford things.
Yeah. That's a good one. That's a good one because what I in Bitcoin's not backed by nothing. What I one of the observations I make is that oftentimes when you ask people, why does the dollar have value? They'll say something along the lines of first they'll say either it's a collective hallucination or belief system, but after they get through that, they'll say because of the military and because of taxes, things like that, and it's that militaries protect things of value. The thing is not of value because there's a military, and that every government currency that's hyperinflated has had a military and the ability to tax, and that even go back to Roman Empire, I presume you can't
just
pay.
About to bring it up.
You can't pay soldiers.
They're not taking your bunk clipped metal anymore.
Then you don't have an army.
The barbarians are going to sack this.
You have to have something of value to be able to pay. And if you destroy that thing of value, the money, you no longer have the thing to pay, right? It's the reverse set of operations. It's your ability to print money is destroying everything at a more fundamental level because of the individual. But even the thing that you're, keying on as a reason, that's the thing you're putting at risk because you're not going to have a military if you can't pay them with a form of money that affords livelihood to make them putting themselves at risk.
Worth it.
Yeah,
this is played out, but it's hilarious. You brought that up, and I caught it yesterday. I watched 6 or 7 videos of enlisted military servicemen and women just being don't join the military. You don't make enough money. It's not worth it. Saying that explicitly, it's not.
Yeah,
worth the risk.
and also again, but go to the more fundamental level. It's if you don't respect the rights of the individuals. I saw a picture that Mike Hobart posted about, there's that kind of thread going along of post the most epic picture of yourself. And he posted a picture of himself in uniform waiting for his, I think he said
discharge
papers as he was refusing to take the shot.
Yeah.
But if you think about it, it's not just soldiers of fortune, but it's if you disrespect the rights of the individual and then you expect good quality people to want to fight for what, because it isn't just about money and riches, right? It's about wanting to protect something
worth protecting.
Right. And that thing is governance structure or country founded on the idea that the rights of the individual are more important than the collective, and that the way to get a strong collective is by protecting the rights of the individual.
Yeah.
And so, it really astounds me anytime that I hear people talk about the dollar as being patriotic or that Bitcoin is treasonous, because those people are just short of history and,
And a free market sound money is probably the foundation for respecting individual rights, just allowing people to access a monetary vehicle that allows them to accumulate capital over time and disperse it as they see fit. That is
yeah. I mean, and one of the, and I have it on the back of the book, but I have difficult to see Bitcoin as money, or I'll read the whole thing, but discovering Bitcoin is a personal journey that requires navigating uncharted waters. But as the picture comes into focus, chaos turns to order gradually, then suddenly. While difficult to see, Bitcoin is money and is the greatest instrument of freedom ever invented by man. And I kind of stole, and I have it referenced in the actual book, but it's playing on a line from Hayek in The Road to Serfdom, where he describes money as one of the greatest instruments of freedom ever invented by man because it affords people with a range of choice.
Do you know what page it's on?
I believe that might be my copy. So, I don't know.
We've got books in the studio.
I don't know what page it is, but I've got this highlighted.
That's definitely my copy, I think.
I'm pretty sure this is my copy.
Is this your copy?
Yeah. Just based on the chicken scratch. Oh, I found it. Page 125. This is the Road to Serf from Texts and Documents, the definitive edition, F.A. Hayek, edited by Bruce Caldwell. He said, here, I'll read it a little bit ahead, but it says, because in modern society, it is through the limitation of our money incomes that we are made to feel the restrictions which our relative poverty still imposes upon us. Many have come to hate money as the symbol of these restrictions, basically keying on like money being the root of all evil. He says, but this is to mistake for the cause the medium through which a force makes itself felt. It would be much truer to say that money is one of the greatest instruments of freedom ever invented by man. It is money which in existing society opens an astounding range of choice to the poor man, a range greater than that which not many generations ago was open to the wealthy. And so kind of connecting this idea that the economic good that is money is what allows people to pursue the endeavors that they actually want to spend their time on, produce value for others, and then be able to convert that value into the widest range of choice, the output of all the other people that accept that form of money. And that, when you connect that idea of, I get to work on what I want to work on and somebody pays me in a medium that then I can convert into a range of choice that, a few generations ago, kings might not have, been able to access. That's what money actually delivers, and that it's not, kind of the exorbitant wealth that's created by quantitative easing, and the wealth extremes that are created by quantitative easing, where the economic system's broken for virtually everyone, but it's working for very few. It is that I get to go out in the world, I get to deliver value, how I see and choose, and then somebody can't come behind me and cut me out from underneath my knees. Like that value that I deliver in the world, I get to go out and determine how to allocate, what value I'm going to get in return without it being debased. And the ability to do that is incredibly, it is an instrument of freedom when you start to see it in that way. Because the other thing, and I don't know if I talk about it in the book, I think I talked about when I was describing the cover, but this idea that a sound money basically creates the incentive for you to produce more value from others than you consume of them. And if we're living in a world where there's only 21 million Bitcoin, if you have some Bitcoin, that means that you've delivered more value to other people than you've extracted from them. And so any savings that you have in monetary form basically represent that excess of what you've delivered for others but have not consumed from them. And there is something also noble in that, But if you don't have that mechanism that stores purchasing power, basically the incentive reverses. You don't actually have an incentive to deliver value to people. You actually have an incentive to extract. Yeah. And doesn't mean that, everyone then suddenly doesn't, still find ways to deliver value. It means that the underlying economic instrument has a perverse incentive that's basically working, against the stream of those that are trying to create value.
Yeah, it was pretty poetic that you just switched up that quote, applied it to Bitcoin, considering that Hayek was the one that said, we will never fix the money until we find a sly roundabout way to take it out of the hands of governments and central banks. And it's exactly what Bitcoin is.
I'm surprised I was able to find it so quickly, but yeah. When you gave me the book, I was like, I'm not going to be able to find it. But yeah, so, that's also just, a little nugget from the cover that is there, and it's fully referenced in I think a few different chapters too.
Yeah. So, we came here to sort of place Bitcoin in the context of the great financial crisis and how that deeply affected how we came to understand Bitcoin at the end of the day. We've had probably one major crisis since 2008, lockdowns, money printing. We would both argue that wasn't really the crisis. It was lack of liquidity in the banking sector that was made clear in September of 2019 with the repo spasm, but they were successfully able to paper over that narrative with the COVID narrative. And so I would say that even though that was a financial crisis that led to massive amounts of money printing, people probably, I would be comfortable to say that most people just associate it with COVID and the lockdowns and not some stress in the banking sector. With that in mind, I think moving forward, how do you think people will view Bitcoin in future financial crises that are probably inevitable, considering the fact that they always need to print more money and they've hiked up rates and pulled a lot of money out of the system. And they're just waiting for the point at which it breaks. How do you think Bitcoin is viewed by people in these scenarios? Do you think they get it?
Yeah, I think that 2020 was full blown financial crisis. I think that so it was in many ways worse than 2008. I think most people, even kind of wise on it, had that impression that it wasn't, but because of their association with the government shutdown, like they associate, and what they remember is, the 10 million jobs lost or whatever it was. And they're like, oh, that wasn't the financial system. That was the lockdown. And the financial crisis was the lockdown too, and that they don't go back to the repo crisis where the Fed printed more money in a single day, 75 billion, than they ever had, because prior, in
post 50 billion
post financial crisis QE, the height of it was 85 billion, but that was in a month. 75 billion in a night on a dime, so that does not happen if something isn't broken. And when the repo markets, the interest rates tripled, like something was deeply wrong then. February prior to that was the setup for essentially the oil wars, which created the crash in oil that then, ultimately then when they did the government quote lockdown, resulted in oil for technical reasons becoming negative, but like going, from wherever it was to like $30.
The May futures contract.
Yeah. But in that moment of crisis, the Fed did remarkable things that they hadn't done in prior crises, right? Like they fundamentally broke their charter, in their in concert with the Treasury to basically like fund, to basically be able to purchase corporate debt, to be able to purchase municipal debt. Like they were basically having to plug the ship in many ways that were breaking and that they were seeing, and they were just stuffing money in the system. And that doesn't make the crisis any less bad. It makes it worse, in my opinion, that they were having, they had their learnings from the last crisis, and they were like, okay, we're going to need to print money quickly. But even then they like did 3, instances of like rate cuts and, emergency funding for the repo markets before they then came out and were like, we're doing unlimited quantitative easing for as long as we have to do, very quickly. So I'd say 2020 was just as bad. And that thing, that turned people onto Bitcoin, right? Like Paul Tudor Jones's letter is one of the things that I highlight a lot when I'm trying to relate to, I reference it in the presentation I gave at Dallas Old Parkland. He has his 2 quotes, keying in on Bitcoin's finite scarcity and the fixed 21 million supply with, we're seeing a rate of monetary expansion like none of us have ever seen. Like a market, I think the term he used was that shook even a market veteran like myself, who's been there for 50 years, whatever. So when they printed $3 trillion in 3 months, 13 weeks, people that were paying attention connected it to Bitcoin. One of the things I also talked about in that Bitcoin is not a hedge presentation at Old Parkland is, in order for a crisis like that to be relevant to you, or not to be relevant to you, but for you to be able to relate the relevance of Bitcoin to it, is that you have to know something about Bitcoin prior to it happening. imagine you or somebody, you just said Bitcoin snake oil, and I have, never endeavored to learn anything fundamentally about it. And there's a bunch of market turbulence, and then you might read in the paper about how the Fed's reintroducing QE, but you don't understand the effects of it. You can't relate that event to Bitcoin, But if you've picked up a book and you started to read about how, the 2008 financial crisis is related to Bitcoin, and about how the financial system and its instability is rooted in the printing of money, and that it would be in all of our individual interest, literally anybody who produces value as, who's our interest, to be able to save in a form of money that can't be printed, and that this is a solution, then the next time that the crisis happens, you're then going to say, this thing I read about, they just did it again. Maybe this whole thing, Bitcoin, makes sense. And I think what happens is as a function of time. It's like knowledge distributes as a function of time. So more people are likely to have read something about Bitcoin, and that its whole purpose is to eliminate people's ability to print your money out from underneath you, such that each next time it happens, not only does it make that system more and more fragile, and the ramifications of it on the system become more apparent. So even if people haven't connected the solution, they're out there with their radars on and trying to figure out, knowing something's broken but not knowing how to fix it. And then someone slides the Bitcoin standard across their desk or gradually and suddenly, and they start to relate it to it. So I think that the short answer is just function of time. More people will have learned about Bitcoin such that when the next thing happens, because it's inevitable that they're going to have to print more money, that they're then able to connect it to Bitcoin. And that only accelerates because knowledge distribution accelerates.
Yeah.
And it is inevitable. Each time they do QE, it causes the credit system to metastasize, has since 2020, credit systems expanded by, I think, 23 or 24 trillion in total, and just in the US. They are, quote, trying to, drain reserves, quote, rein in inflation, not going to work. And then, something's broke, and then they come back in and they're going to have to print more money than they had before, because the system and the amount of liabilities in it, and I'm not talking unfunded pension liabilities, I'm talking about fixed debt maturities, are so much larger, it necessitates they have to print a shit ton more money. And that absolute scale, was enough to spook Paul Tudor Jones into Bitcoin, but it's just perfectly rational. And the more it is, each successive instance of it puts people on that path to being able to see Bitcoin.
Yeah. And I apologize for the background noise. They're working on the restaurant below the commons right now.
Yeah.
We're getting a restaurant back.
Whenever something happens like this, I say, if you're going to be in Bitcoin, you got to deal with a little volatility.
Yeah.
So can't deal with a little, people sawing underneath your feet. How are you going to make a bear market?
Yeah. Come back next cycle.
Yeah.
No, would that be if you had to guess, how much money will they need to print next time around?
I just anchor to more. So,
you think we hit?
I think
what is it? 9, 10, 11 figures?
How big is that?
10 trillion at least.
Some of the ways that I bookend it.
Yeah, 10. No, I gotta add 3 more. 14 figures.
The numbers get so large, I start to,
Yeah.
So over 5 years, they
11.
created 3.6 trillion. And then between 2019 and the fall of 2021, basically 2 years, they created 5 trillion, or had to inject 5 trillion in the system. So it's both the scale and the speed accelerated. And so it's not wanting, one way that I would think about it is in terms of system leverage, debt to dollars. So when there were 70, in 2019, there were 73 trillion of of 73 trillion of debt and like 3.5 to 4 trillion in the banking system. So I think whatever it was like something like 17 times. And then after the, in terms of debt to dollars, and then they print all that money and it was 12 to 1. Now they're in the process of taking that money out, and the credit system's continuing to grow, which is one of the things that creates this strain of inevitability of something breaking. It's like, as credit system is trying to expand because it needs to expand, otherwise it collapses, the Fed's taking the building blocks of liquidity out, so it's actually re-levering the system essentially. That they have to deleverage the system. They have to reduce that ratio. If it was say 8 to 1, then that would at a debt stack of 100 trillion, that would put it at like 12.5. So that would say that they you need to introduce an incremental 5 trillion, from where they're at today approximately. But I think that ultimately what they did before, and why that they'll have to print more money than they did the last time, is like they're going to overshoot because they're trying to plug all the holes in the leaky ship. So it's like, I don't like to pick put your number on it, but it's going to be greater than $5 trillion. They have to deleverage the system because the system is now $25 trillion larger than it was before.
Yeah.
And they're having to sustain all the past excesses as well.
Yeah. Logan, can you go yell at these guys? I can't take the volatility of this noise. I'm kidding. But the last question, I think this is on people's minds too. And this is really hard for people to grok. Like, the system that you just described with the immense amount of debt and the dollars, the significantly less amount of dollars underlying that debt. It's a lot of money. Unfathomable, astronomical numbers.
Too large for us to actually conceive.
Yes.
Truthfully.
Yes.
Like, quickly, like one way that I would relate the 3 trillion that was printed between March of 2020 and May of 2020 was that Jerry World took $1 billion to build, and it coordinated economic activity the way that you should think about, what 1 billion represents, for 5 to 6 years to build that stadium, which at the time, maybe to this day, was still one of the nicest, and there's only 32 of them in the country. And 3 trillion, what they printed just for that 3-month period, was the equivalent of 3,000 Jerry Worlds, just flooding the system. Like, literally, like, the word trillion is a number that you can't conceive of in your daily life. Like, I don't even think, maybe, Elon Musk can start to equate them to like the number of rockets, but like, the
number of stars, you mean?
The number of, like, in your individual life, when you think about like, buying one of the biggest ranches in tech, it's like, you still, like, $1 trillion is outside of the realm of like what you can actually grasp in your daily life, of like what that value translates to, what you'd have to need to produce.
Yeah, and that's you're helping me like frame the question even better, because with that fact in mind, this is all unfathomable. That's what I think, and it could be making an assumption here, but that's what I think. When we talk about transitioning to a Bitcoin standard, I think that's the one thing that holds people up, is thinking of those unfathomable numbers. Like, the incumbent system is this big. How could we possibly get in the lifeboat and get to the Statue of Freedom in the calmer waters with that in mind, this unfathomable amount of dollars in debt that is built up? Like, how do you transition away from that? Like, with the least amount of volatility as possible? How do you get from the front cover to the back cover without tipping your boat, essentially?
Yeah, I think that the error that most people make is trying to forecast the end state and trying to prognosticate or forecast everything that has to happen between now and then. And I talk about this in one of my more recent pieces, not in the book. I'm sure I touch on these similar themes, but in a different way. Of the way I like to describe it to people is like, if I know A is where I'm at today and B is Bitcoin's the form of money that everyone's going to adopt, I don't have to know exactly what that looks like or when it's going to happen or how we're going to get there in order to start heading out in that direction, because there's a ton of uncertainty in the world. We're mortal, we lost your father too soon. The future, we don't know exactly what's going to happen. We don't know how long we're all going to be here. And that, when we think about the ideas, it's like, what directs human action? What is the thing that allows me to take one foot in front of the other that guides that decision rationally without having to know how the next 10 years, 20 years, 30 years, rest of my life, maybe less, maybe more, plays out. And so that it's really to start with the inputs of like the cause and effect and getting less hung up on, well, what are the consequences, and more focusing on the cause part of the effect rather than the effect part of the cause. Because if you get to the idea of it's in everybody's interest to have a form of money that can't be printed and that allows you to better retain value, and you recognize that this other thing isn't sustainable, it doesn't really matter, how many other people's lifeboats, tip up, down, go under. It's just, what's the most rational thing for you to do to look over your own self-interest, and that if enough people do that, if enough people are rational, which, people are, then we get to a better destination than we otherwise would be. Like one of the things I like to relate it to is like, hey, Venezuela hyperinflated, and there were a lot of other working currencies around there. Imagine if Venezuela happened and there wasn't a working form of money to coordinate aid or to help reboot, right? That's what Bitcoin is. Imagine there wasn't that other system, it's going down, Now just imagine a world where there wasn't this thing, Bitcoin, that could be the solution, because the ship's going down either way. It's not going down because Bitcoin's here to fix a problem that was created by the ship that's gone awry. And so I think that the idea of like the nominal amount of money trips people up, but the fundamental answer is the nominal amount of money is not what's relevant, because there's enough money to go around to satisfy everything and everyone, because Bitcoin can be divided into, infinitely small numbers of units. And what that ultimately represents is that everyone can have their own percentage of a fixed pie. And that in the world with a fixed pie, that means that their value will be stored, or will most reasonably be expected to store value better than if that weren't the case. And if that weren't the case, is what the current system is, where they regularly print money, and so it's like, don't get hung up on, the 93 trillion and, how that all gets dealt with. It's real and it's valid, but the thing that's relevant is that it's not sustainable, and it's what causes them to print money. Once you realize that, and that you realize that printing of money is a problem, then your solution is finding a form of money that can't be printed. And if that thing is Bitcoin, it's like, okay, be rational and take that forward action to solve your problem. But you don't have to be as concerned with like, well, what's the consequence of, there's a lot of people that are holding U.S. treasuries that think that they're assets and they're not going to be worth anything, and like, I don't celebrate that fact, but it's just reality. I don't have to like get hung up on like, well, who's the person that has the treasury and how's this going to impact their saving? It becomes less relevant than like, what's going to guide, the future, and what is the reason and logic to lead to those conclusions. Because if you focus on like all the different things that happen between here and there, or what exactly it has to look like, and you're not focused on the inputs, you'll never get there.
Yeah, completely agree. I do think that is like a mental hurdle for people. I think the sheer size of the incumbent system is just like a mental anchor. It's like people almost feel like they have to be pot committed to that.
Yeah, but it's like, well, but if they can print money faster than you can contemplate the size of the amount of money they're printing, like literally when someone in Congress says our budget's $2 trillion, like you have no concept of what 2 trillion means. You just don't. Like, you can't. It's a number that's too large.
And if you were to equate 20,000 Jerry Worlds.
Yeah. So like, it's like the numbers become irrelevant when they become so large, and you should be asking yourself, well, if they become so large, then maybe the thing's becoming less relevant, you know, and just, you know, hopefully be glad that you don't own any of the credit that is going to, you know, essentially not be money good, because the money is not going to be worth anything when they pay it back to you, you know? So, but I do agree that that's a hang up, but like, I just encourage people to like focus on the inputs of what drive decisions, because that's what will lead to outcomes. And there's two sides of the equation. It is the printing of money causes the currency to fail for very fundamental economic reasons, not just because of the fact that they printed too much of it, that the underlying form of money cannot coordinate trade, which is money's value to the world. And that if that's the case, you still need money, and you still have to go solve that problem if you do have one, which everyone does.
Yeah. No, I think it's important to walk people through this, because I do think
like
that's the big problem.
I had that question. It was one of the questions they answered at Old Parkland was like, this logic makes sense in theory, but how do we get there? You know, it's like, and that's part of, you know, it was part of the inspiration for the article that I wrote a few weeks ago.
I made the thumbnail for you.
Oh, yeah, that's right. That's right. That's right. Great thumbnail.
Yeah.
Great thumbnail. Perfect. On the first try.
On the first try.
I literally texted Marty. I was like, hey, I need a picture of a dude who's like on a cliff, you know, where there's like a
deep valley. And he sent me one back. I was like, this is perfect. No iteration needed. But the idea that like someone's going next, you know, and you just have to figure out what the economic incentive is that dictates why that is true, because whether or not it's you is entirely in your control and no one else's. Yeah.
And that, yeah, it's just, you know, but then the other connection is like, that's everything in life, you know, like, how do you build a building if you don't know that there's going to be someone there to buy it? You know, you're operating on reason and logic of what, you know, guiding inputs that, you know, result in outputs. And sometimes, you know, you get things wrong, but that's why in my case, and what, you know, I intend this book to be, it's like, I had to test that reason and logic about Bitcoin over and over again, at different levels or for different questions, in order to consistently arrive back on it being the solution. Like, and I also try to reinforce that to people. It's like, you don't get to having the level of, you know, confidence, conviction, exposure to Bitcoin as I do, or anybody does after they've been working on it for so long, without having to struggle with these same questions, because they're very logical, you know? And so, but it is a classic, you know, pitfall to try to focus on the endpoint rather than just what guides the next decision for the next person.
Yeah. It's an incredible book.
Thank you for writing the forward.
I mean, like I said, the last sentence was, the other part of the forward that I wrote about was my journey of learning about Bitcoin. And that's speaking to the point that you said earlier, is that each cycle, whether it's a financial crisis cycle or a Bitcoin halving cycle, whatever it may be, more people are more aware of Bitcoin. And I think content, like Gradually Then Suddenly, the Bitcoin Standard, the Fiat Standard, Broken Money by Lynn, a bunch of other books on this bookshelf and in other places in the world, have set individuals living today in 2023 and moving forward up in a much better position to get from 0 to 1 much quicker. Because when I was learning about Bitcoin in 2013, 2014, luckily we had Michael Goldstein and Pierre writing the Nakamoto Institute, which has probably saved me in the early days. And you had Szabo's blogs that weren't really directly connected to Bitcoin, but describe the technical aspects and social incentives that make it work. But beyond that, I mean, you had Andreas Antonopoulos. His videos were good. There was a few podcasts. Shout out to Vortex and crew who were running the Bitcoin show back in the day. But outside of the noise from the altcoin world.
The Vortex or One Vortex? It's just the Vortex.
I just call him people just call him Vortex.
Okay.
Vortex.
Yeah, but he was in and around like sending signal.
Yeah.
You know, particularly on like the Bitcoin versus.
Yeah. And the point being is like, I think anybody who picks up this book as their first starting point on their journey to try to understand Bitcoin is in a much better position than I was at the age of 22 in 2013. Like I said it in the forward, I think this collection of essays that you've expanded on in the book is the best 0 to 1 primer for people to get to not understanding what Bitcoin is to having a well-rounded understanding of what it is and how it can impact the world.
No, well, one, I appreciate you having written that and saying it because it means a lot to me. And it was guided by, once Saif had sent me an early copy of the Bitcoin Standard. He had, we developed a friendship, working relationship in the year prior to that before he had a working draft. But second, the Bitcoin Standard came out, Gideon Powell and I bought 250 copies, and it was like, I just had this, very common sense, but it was like, okay, how long does it take to read a book? I can send this to somebody, they can read it, and then I can help them understand it from there. But imagine me trying to explain this. Like, the best leverage on my time is buying the book and giving it to somebody to learn about Bitcoin. And then, also though, like there was a way that the Bitcoin Standard connected for me. And then I had these, even though like my brain connected them, I still needed to like get that thought process on certain key questions down on paper to test, the reason, logic, assumptions, however you want to describe it. And that now this being in a book format and all being packaged as one, it's like the benefit of it in the past has been something similar to what I expected to carry forward, but I hope to be on an amplified basis, is that if I had to go through all those questions and order them myself, now somebody comes and reads the book, it will hopefully accelerate their path to understanding Bitcoin, because rather than having to necessarily sit there and ruminate on the same questions to order it themselves, and they inevitably would have gotten there over a longer period of time, possibly shorter, but that this now serves both for people that have already read it, that are familiar with it. Hey, read the book, because maybe somebody wouldn't, click on an online blog post, but also they're refined, they're shaped, and having it all packaged as one, they have everything right there, easily attainable. And that, if it was going to take someone X amount of time to get to Bitcoin, if they read this, the goal is that for certain group of people whose minds work a certain way that relate to the ways and ideas that I talk about, that it will accelerate their journey. So it's kind of that is what the distribution of knowledge is about, that it does accelerate because there's resources that didn't previously exist. And when I was learning about Bitcoin for the first time, even though the Bitcoin Standard was formative for me, it wasn't yet out. I was lucky to have a personal and working relationship with Saif, but then also people who pointed me to the Satoshi Nakamoto Institute, and it's the more high signal content out there, the faster the destination, or the more kind of accelerated the path is that an individual should be able to grok Bitcoin. And if I've done my job, that's what the book will do.
What took me probably about 3 years to go from zero to like a comprehensive understanding, like as close to I am now, as I think I fully understood Bitcoin like 3 or 4 years in. If you pick up this book, you can do it in a weekend, I think.
I don't think so. There's got to be some time component to it. Let's call it 6 months. You read it over a weekend or a month, and then like over the next few months, I feel like the things will start to really sink in.
Okay. From 3 years to 3 months.
Yeah. We got to be like, humble. Like, understanding Bitcoin is still hard. It's still difficult to see.
I don't want to blow smoke up your ass, but I think you did a good job.
Thank you.
Thank you. It's been great.
Thanks for having me on.
Anytime. I mean, you're
Merry
right.
Christmas.
You know, the studio is always open if you ever want.
Yeah, sometimes you demand that I
did last week.
You did. Yeah. I answered the call.
Thank you.
I do that.
Mention again, where can people find the book?
So the book is exclusively for sale on thesafehouse.com, safe spelled SAIF. And you can read the foreword and the introduction on TFTC.io, and also review the table of contents, get a good sense of what's in there to figure out whether or not you want to purchase it. If you're, kind of struggling with some of these questions or some of the ideas on the podcast make sense, like definitely go to thesafehouse.com right now, buy the book. And then, if you've read Graduate and Suddenly in the past, the online series, buy at least 20 copies for your friend. Any fewer, you're doing your friends a
disservice.
Serious disservice. Yeah. It's an injustice, some would say.
Yeah. I'm going to buy $20 and take them home. But is it weird for me to go home to my friends and family and hand them a book that I wrote the foreword to?
No. I think it's hey, I'm proud of this forward. I care about you and I want you to understand Bitcoin.
It's all about the framing of how I present it to them. It's not
I care about you.
Yeah. I care about you. Here's this book. I just so happened to write the foreword.
I wrote this foreword with you in mind.
Yeah. Well, Parker, as I said in the foreword as well, it's been incredible 7 years now almost, developing a friendship. View you as a mentor to a certain degree as well.
Same. View you as a mentor and a friend.
Yeah.
Go both ways.
Yeah. It's been fun to see you go from where we were when we first met, both of us, where we both were when we first met, to where we are now. It's pretty cool.
Yeah. It's been a fun ride, and look forward to the journey ahead too.
It's going to be a long one. Volatile, fun, stressful, exciting. But that's what it's all about, the journey. Would it be worth it if the journey wasn't the way it has been and will be?
Wouldn't want it any other way.
No. Peace and love, freaks.